The direction of the U.S. economy befuddling the experts again and rattling investors in a huge way as the latest consumer price index data finds inflation in August was mostly unchanged.
The report triggered Wall Street's worst day since June of 2020.
We're seeing more flattening in the yield curve. I think that's not a big surprise.
Nowhere was the disappointment expressed more profoundly than on Wall Street.
The current picture is plain to see. The labor market is extremely tight, and inflation is much too high. We at the Fed understand the hardship that high inflation is causing. We're strongly committed to bringing inflation back down, and we're moving expeditiously to do so.
During the month of July 2022, the Consumer Price Index, or CPI, for all items had remained unchanged due to gasoline prices falling 7.7% and offsetting increases in food and shelter. Unfortunately, this time around, in August, inflation still didn't drop. The fall in gasoline prices failed to offset the soaring prices in medical care costs, shelter and food. The CPI for all items in August hence rose by 0.1% to a year-over-year inflation rate of 8.3%. This disappointing August CPI report is provoking a Federal Reserve meeting. The Fed is set to meet today, 20th, and tomorrow, 21st September 2022. This meeting is part of the continuous fight by the Fed to tame rising inflation in the United States. The last time the Fed raised interest rates was in July, and this was by 75 basis points. In this episode of Business and Technology, we look at the possible outcomes of this meeting. This is BTTV. Before delving into the topic of the day, first, let's understand why the Fed keeps changing interest rates. The Fed principally has two missions. 1. Keeping prices stable. And 2. Maximizing employment. It does this by raising rates when the economy seems to be overheating with too much inflation, and cut rates when the economy looks weak due to high unemployment. With that said, now, let's look at what to expect in this September's Fed meeting session. The idea of an interest rate cut during this upcoming meeting is out of the picture, given that the US economy is faced with an overheating economy, and not a weak one. What even made this possible interest rate hike at the next Federal Open Market Committee meeting more glaring is the market's violent reaction on the 13th of September to the Labor Department's report that showed inflation worsening last August. Major indexes fell to June 2020 lows, with the Dow tumbling 1,200 points. The report was disappointingly shocking as the market was expecting a 0.1% fall, and not an increase in the Consumer Price Index. With such report, interest rates hikes have mostly been forecasted to nothing less than a third straight 0.75% increment, and a few are even expecting a full basis point hike. Today, inflation rates go far beyond the 2% target set by the Fed in the year 2020. And what to expect from this Fed meeting slated for today and tomorrow is not exactly certain. The market currently perceives a 1 in 5 chance for a full 100 basis points increase, with a 75 basis points increase remaining the most popular expected outcome of this meeting. The final decision of the policymakers is expected tomorrow, 21st September 2022, amidst a market that is quite watchful and sensitive to issues related to inflation. As we at BTTV keep our ears to the ground and keep you updated with the outcome of this Fed meeting, thank you for subscribing to the channel for more on business and technology. And until the next episode, peace.